around the year 2000, that's when China joined the World Trade Organization, WTO. And when this happened, you see the US data takes a huge turn. And what you see is that wealth just through income just started plummeting. Like the growth of wealth started plummeting. I don't have a problem with people going after flyers. That's what I call them. But I think what you need to have it's like your triangle set. Like you need to have your emergency cash. Anything happens, you're working, you lose your job, you've got something to tap to get you through. You should have a base of long-term investments. Once you have those buckets, then I think the top of that triangle is the things that this could go to 0 or this could go to 1 million. One of the things I believe is that just the way the system works, the only way to truly get ahead and grow wealth for your family or whoever you care about is to invest.
Yeah, hey, the market hustle, helping you to succeed, teaching like nobody else. Financial empowerment, giving you strategies for generational wealth, so you can start helping yourself. More money for you to be getting. This the moment for you to be winning and be living financially independent.
Market Hustle community, welcome to episode 42. For those of you who are new here, my name is Josh. I'm the guy behind the Market Hustle. And for those of you who are returning, welcome back to another great episode. Today we have with us Steph Guild joining us. She is the head of investment strategy over at Robinhood, and she has quite the background, spending over 20 years at JP Morgan before making the jump to Robinhood. So we're all really excited about this. And what I really love about having Stephanie on this podcast is she actually gets what we're all about here at the Market Hustle. She's big on making investing more accessible and breaking down some of these complex, confusing financial topics in a way that actually makes sense. Before we dive into this podcast and officially welcome Stephanie on, let me bring back our co-host, or welcome back our co-host. We've got a full house here today, so it's going to be a lot of fun, a lot of great questions, and I think we're all going to learn quite a bit. So let's welcome back Bafi. Bafi is in New Jersey. How are things going on your end, man?
Better than good. Can't complain. Very excited. Looking forward to a lot of earnings been happening recently. And so it's exciting to kind of see a lot of good things happening in the economy and the markets all around. And really excited for this episode and I hope the audience can tell in my voice how excited and epic this episode is going to be. So yeah, time to have some fun. Let's do it.
Completely agree. And yeah, what better day to have somebody representing Robinhood come on the podcast after Robinhood smashed their earnings, had an incredible earnings report. So what a great transition into that, having Steph on the podcast. Pierce, how are things going in Southern California?
It's rainy, it's cold. For Southern California, it's 55. So for the people who are not used to the cold weather here, just bear with me. But other than that, super excited for this podcast, man.
Great to have you back on, man. And then Fernando is actually with Steph in New York. Fernando, how are you doing, man?
I'm doing well, actually. I usually say that the weather is great. But New York, it's a different weather. It's definitely a little rainy, but it's awesome to be out here. It's funny, I actually ended up coming here to visit or do some other things, and we had this podcast today. So I asked Steph if I can come by the office, and it's an awesome looking office. And thank you, Steph, for having me here. Yeah, I'm doing well. I'm doing really good. I'm pumped.
Awesome stuff. Well, great to have you back on here as well. Like I said, we got a full house here. That being said, let's waste no more time. Stephanie, welcome on to the podcast. Do you prefer to go by Steph or Stephanie?
Everyone calls me Steph. When I was at JP Morgan, I was Stephanie, but now I'm Steph.
Okay, we'll call you Steph. Well, great to have you on the podcast. How are you doing today?
I'm great. It's chilly, but that's normal, so I'm used to it. And we just had some snow. We're expecting some. And like you said, we just had our earnings yesterday, which went pretty well. So yeah, and I can't complain. It's a good week.
That's incredible. Yeah, I bet the office is happy with the good earnings reports, and optimism.
A little bit later, walking a little bit later.
I love it. Well, yeah, I'll just go ahead and start with maybe the first question to just get things rolling. I'm fascinated by your experience because on one end, you come from more of the traditional finance realm, JP Morgan having over 20 years of experience there. It's like you understand that space deeply, I'm sure. And then now you're working in more of the innovative space with Robinhood, like working on a powerful mission to democratize investing for, your average day investor, your retail investor, if you will. So I'm curious to learn maybe what's something that's kind of surprised you about how retail investors actually behave versus how Wall Street thinks they behave.
Well, certainly Wall Street, just the term retail investor, to me just connotes the people who, like the movie Dumb Money, right? Like it just connotes people who are in last, outlast, from the trends. And from my purview, that is not the case at all. I think what Robinhood has been able to do is bring on a generation of investors and a group of people who would not have otherwise been able to, invest their money little by little and grow into something real. And I think it's really like what I see when I look at what our customers do, they're smart. Like they really are. They are no different than past investors from the perspective of they invest in what they know and understand. And that's what Warren Buffett does, like, right? That's like what some of the best investors have done. The difference is that what they know and understand is different from past generations because they're younger and they're just more technologically savvy than previous generations. And as a result of that, like they have time on their hands, right? So they are making investments in things that we don't know yet what will happen to the take up of electric vehicles, right? Like we don't know what will happen with quantum computing. Exactly. We don't know what will happen with AI, but they're willing to make those investments for the long term because they believe in them. In addition, you see, for example, a company like Apple, I think that's seen as like is today's utility company, right? Like for 20, 30 years ago, you invested in a utility company for the dividend and for the consistency. And today that's Apple. Yeah. So I think they're smart. They have access to information like so much, right? Like previous generations, if you wanted to get invested, you had to actually ask an expert to do that for you. You couldn't even do it because you didn't have access to the information. But today you do. So I'm thoroughly impressed, and I think they can get a bad rap. And I'm here to help change that message, I think.
I love that. That's incredible. And for a little context, like I remember just seeing the early days like of Robinhood start, hitting the scene. One thing you guys did great, initially right off the gate is making trading zero, like having no fees, like no fee trading. Like before, when I first started investing, I was using E-Trade and I had to pay $7 for each trade that I actually did. And it was ridiculous because it just cuts into your
red.
Exactly. So that was such an incredible move by Robinhood. And I really like what you guys are doing just because you make it so simple to actually get started, and you do a good job at not making it overwhelming because all the new investors I talk with, and I'm sure Bafi and Pierce and Fernando can also attest to this, like one of the biggest hurdles for somebody actually getting started and actually staying consistent with investing is just getting overwhelmed with some of these different brokerage firms where it almost kind of feels like they intentionally make it difficult. So you have to like reach out to them to like ask for help. So yeah, I really love what you guys are doing at Robinhood. And I'm curious though, so what has been something that's been kind of eye-opening, as you've joined the Robinhood firm compared to maybe the past, working at JP Morgan? Like what's kind of like the philosophy difference that you've noticed that has really kind of blown you away?
I think two things. One is that, to your point earlier about like making it simple, is that like we spend so much time on design and content. Like how are we saying it? Can there be any assumptions made in this that shouldn't be the assumptions we intend? Can we make it short? Like it's always like the battle of like, how well can we explain it in only 3 lines? Like, and also just the design, like, can it be as intuitive as possible for someone? So that's, I think, like way more so than a bank, which is just like, to me, purely like creates things out of function, rather than really being empathetic to the user. And then the second thing is like this concept of first principles that I think when you're in finance, like when you work in a traditional finance place, like there is an element of ego. You start off at the bottom, you have to work long hours, you learn along the way, and then you earn your stripes, right? Like people are tough on you in early days, and then you get to be the one that's tough. It's like a frat. But it's and I wouldn't have I would not trade it for the world, having all the knowledge that I do have about certain things, right? Not that there isn't always something to learn, but the fact that like in that kind of way of thinking, there are a lot of assumptions. Like this is how it works, and so what do you do next? But in first principles thinking, the first question is, wait, why does it work like that now? Could it work differently? What if we scrap that assumption? How would you do it if this didn't exist? If this didn't exist? And that's what I actually love about it, is that we get to actually, in a way, that's how you break things.
Yeah.
And I'm a firm believer that like going through hard times, things breaking, like it's how you make things like amazing for yourself, and it's how I think we can make things amazing for a customer. It doesn't mean that we don't learn lessons along the way ourselves, but that it really means that like we don't operate under an assumption that something should work a certain way. The word should is a 4-letter word.
And then a question that I have, right, like Steph, when you look at Robinhood compared to like Morgan Stanley and these other brokerages or banks that have been around for so long, and Robinhood, the name, I don't know, for me, I connect both, right? Like Robinhood is coming in to steal away those customers and show them how to invest in a better way, easier way, in a less expensive way. Because a lot of these brokerages, when you see them, they charge fees, they charge commission. So when I think of Robinhood in a way, and I have a question for that, right? Like, if you ever think of a company called T-Mobile, right? They like, years back had something called the Un-carrier, where a lot of companies had contracts. And I'm just doing a comparison to that.
Yeah.
And then John Legere, which was the CEO at that time, kind of similar to V-Letter in a way, as in like they wanted to change that industry. They wanted to take away contracts. They wanted to take away these things that made it so hard for customers and so just saddening to sign a contract for 2 years and have a phone for that long. So I feel like Robinhood is leading that way, and all these other old brokerages are now following Robinhood in that way to be able to not get all their customers stolen from them. Is that right?
Yeah.
In a
And I think, yeah, absolutely. Right. Like why, I don't know if anybody's ever read, this is such a silly book, but it's a business book. It's called Who Moved My Cheese. It's super old and it's short, and you can get through it in like, maybe 2 hours at most. But it's literally about mice that like go and find this like area full of cheese, and they all just sit there and they eat and eat and eat. And then there's 2 types of mice. The one that sit there and just are fat and happy. They're like, oh my gosh, we have an endless supply of cheese. We're just going to enjoy it. And then there's another set of mice that kind of look around and say like, I don't know how long this is going to last. Maybe I should go look for other opportunities. And they leave, right? And then, so I think like, if an industry hasn't been disrupted, and I think of a company like Boeing, I think they got to be fat and happy for a long time, right? Is that you just are like, great, we're just going to continue to collect this. We'll look for other ways to like, make money. And I think it ends up getting ridiculous. And so what I think and like, this is like credit Vlad for this, is that he always pushes us to say like, how can we share the economics of their customer base? How can we change? Because it can maintain a competitive stance, because the fat and happy mice are not going to they're going to be slow to change their revenue model if it means that they're going to have to then come up with new and innovative ways to capture their customer base and maintain their earnings. So I think that's kind of the ethos behind it. It's like, how do we share in the economics, or give you the best deal?
Steph, I think that's really, really powerful. And Who Moved My Cheese, by the way, is an amazing book for anybody that's listening that haven't read it yet. It is like a 5-10 minute read, and it seems simple and comical, but Steph just summarized the deep message eloquently behind that book, right? And going off that, my question is, I'm sure you've seen the data on this and how Robinhood has been able to simplify investing for the public at large. And essentially making it so simple. I mean, I started investing using Robinhood 10 years ago, right? And so I've seen the advancement and the changes and the effort, the diligent work that's gone through to make it even more efficient, effective, and simple for everybody else to also benefit from this money printing machine that we have called the economy and the stock market, And so what are some of the things that you guys have done to, simplify it for everyone else, but also continue to do in order to improve that business model so you can serve more people?
I think, well, we've expanded access into different asset classes. We've launched, so we have stocks, options, crypto. We're definitely cheaper to trade crypto than some other places. And then futures, we've been rolling that out. Index options, which is another way of trading. So we've been trying to expand the toolkit for our customer base. Along the way, we've also tried to expand our ways of education, making sure there's education included, and how can we do it in different ways that can capture in the current world of like limited attention spans. And then in addition to that, like I was thinking about like how interest rates went up for the first time in however many years, 15 years. We were like, okay, we're going to give people like, I know my savings account was giving me like less than 1% from, I mean, it was pitiful. Even when the Fed was at 5.5%. So we were like, okay, we're going to track the Fed and we're going to leave a small spread for ourselves, right? But we're going to give you, many, many times over the national average of the savings accounts. And still to this day, right, rates have come down, and we have brought our rates down too, because we don't want to lose money. But we, again, just giving people like, if you're not an investor and you have a reason to put some cash aside, like here, we're the spot for you too. And I think as we recently rolled out, actually in October, we rolled out something called Robinhood Legend, which is another way to give people an opportunity to make better investment decisions. So the way I kind of envision this is like, and this to me is like, I haven't actually ever said this out loud, but when I saw them developing it and we started doing internal testing and as they've been rolling out features, the first thing I thought is like, people, when you're in traditional finance, like you want a Bloomberg terminal, right? Like a Bloomberg terminal is your access point to so many things. And while I have the benefit of having that and have had that, it is the difference between knowing something and not knowing something sometimes. And when I saw Robinhood Legend and we started playing with it, I was like, this is the people's Bloomberg terminal. Like, this is what I could see it becoming. And why shouldn't you be able to have access to all that information as we continue to roll out asset classes and incorporate things like news and sentiment? And what can AI do for us, right? Like, that's the other thing we've been exploring. So it's not over. Like, we haven't broken everything yet.
Right. No, that's amazing. Thanks for sharing all of that. And I'm sure obviously advancement and access to certain information and toolkits, right, opens a ton of doors to endless possibilities. And I'm sure it has changed many lives, and it will continue to change lives going forward. Like you just said, you guys have plenty of tools, options for everyone, whether it's options trading, futures, index options, Legend, which is very recent. And I actually did listen into the earnings call. And for those that are listening that may not be familiar with it, it is more of like your advanced version for your advanced traders, right? Your desktop, but almost like a traditional model advanced traders.
Yeah.
And I'm sure that you can relate to the importance of risk as progress is being made, right? Especially now with advancement, AI, there's a ton of risk that we have to all consider. From your vantage point and experience, what are the top two concerns or risk that you see as the firm diversifies its toolkit?
Let's see. I mean, I definitely think that as we roll out new asset classes, it expands access. But with that comes a responsibility of, offering ways to learn before you just jump in and make decisions that maybe you should wait to make from an investing perspective. So I think about futures, like again, that was such a thing that was like only institutions used futures for a long time, right? Like they did it, you do it for risk management, you do it for giving you short-term exposure. Like there's a lot of reasons why you would use it, but they work very differently. Like they, for example, if you put an options trade on, right? Like you buy like a call option, you're buying the, uh, not like ability to buy something, right? You're buying the option to buy something, but not the obligation. And when you go long a future, like whatever happens with that option that you might have put on, it all sort of like, unless you get called away or whatever like type of thing that you're in, at the expiry is like could be the final judgment of like how you did, unless you have profits early and then you might want to close it out early. But every day you're judged because it's mark to market every day. So like you book profit and loss every day that you're in that position. That's a big difference,
Yeah.
right?
Yeah.
And so and that means you either pay or you get money like basically every day. And so knowing that and understanding that before you jump in, I think is like crucial. And just us giving opportunity. So we wrote, I think it was actually Michael Obasina, who's on my team and is head of education, wrote 20 different articles for our Learn Hub. And
Wow.
he's working on like YouTube videos and things like that to make sure that people like truly understand this. And he did that for Legend, by the way. Like when we rolled out Legend, like there's, I think, a 6 or 7 part YouTube series. The one that's like the ultimate overview has been watched the most, which makes sense. But you want to make sure you know what you're going into before you jump in. Like, you got to do some reading on your own. Because without it, I think that's when you end up making mistakes, and it just puts our customer base at risk, and that's not what we want.
Yeah, I'm glad you highlighted some of those things because, on this platform and our podcast, we really stress, and Fernando's very familiar with this, we stress the importance of financial education, learning how to use the tools and systems that are available to you. And you just highlighted essentially how to mitigate those risks, right? We try to help people mitigate risk, obviously maximize profits and returns over the long term. But the fact that you guys have 20 articles in your Learn Hub program, I think everybody does that, whether you're on Robinhood or not. I mean, I would recommend that you probably should take a peek at some of these articles and some of these YouTube videos, right? Because the knowledge there is transferable, it's cross-functional, it goes across, and it's gonna help you not just with your financial investment decisions you're making, but also other risk things that you might, encounter or indulge in throughout your life. And that is very important. And this time is not us telling the audience that, hey, prioritize financial education, learn these tools. We have a professional with a ton of experience that is at the forefront and leading on some of these leading technologies, repeating those same things. And so, yep, I highly recommend that anybody listening continue to do that. I need to go find those articles myself now because
Yeah,
I could learn a thing or
have
two
to
on
be,
that.
you don't have to be a customer. They're like on our public Learn Hub.
Love it.
The other thing, we have been expanding our YouTube channel. So 2 things I would say. One is we had Hood Summit in October. It was like live in person conference. May or may not be doing another one this year, but we had a lot of different experts, third-party experts that we all tapped our networks to include. And one of the most watched ones is one on technical analysis. That is, the man is like one of my favorite men when it comes to technical analysis. And so I would, that's what I like, there's if you're not a reader, go be a watcher.
Yeah, and you mentioned it, Buffy, right? Like, I mean, Steph's saying it, and for our audience as well, like building that foundational knowledge before going in. And she just said it too, like, you're buying the option, right? Like a lot of people don't know that when you buy an option, you're buying the option, right? That's a good way to phrase it, right? Like, I think people sometimes treat this like gambling instead, and you have to be careful because if you don't have that foundational knowledge, you don't go in and see these articles or take the time to learn before getting in, because you could potentially get burned. And we talk about it all the time, right? Josh, Buffy, like Pierce, like you can easily get burned and then you don't go back. So you can go into the Robinhood app, do something wrong and never use it again because you never took the time to learn how to do
And it's
it.
a travesty then, because one of the things that motivates me is I don't know if you guys have ever seen this kind of data. I can like send it to you after if you haven't seen it, but around the year 2000, that's when China joined the national, or what is it called? The World Trade Organization, WTO. And when this happened, you see the US data, like the data just like takes a huge turn. And what you see is that like wealth just through income just started plummeting. Like the growth of wealth started plummeting. And really it almost made it as such, like you could really, one of the things I believe is that like just the way the system works, the only way to truly get ahead and grow wealth for your family or whoever you care about is to invest. Because, and you can see it in the data, I can send you like a bunch of different charts. It was once manufacturing jobs started leaving the US and going to China, like it materially changed our economy. It materially changed the way people could earn and save. And that's why I so much believe in like, I don't know if we're going to change this system, but we can certainly invite you in and
love
help
that.
you. And it doesn't take a lot. Like it's you know, as little as $1
Yeah.
to buy a stock. And over time it adds up. It does. So.
Well, and Steph, that's what I really appreciate about Robinhood. You know, I know there's a lot of criticism around, you know, sometimes people say Robinhood makes things too simple, but I think that kind of plays to maybe the finance, you know, the ego part that you were talking on, where it's like some of these big players, you know, maybe they see you guys making things accessible and they kind of get worried about you coming after their market share. So they have to put out articles and saying like, oh, Robinhood's bad for making things too easy, yada, yada, yada. At the very least, you're giving people the option to learn first off, and then take control of being able to use tools that you guys make available to benefit themselves with their financial future. And first off, I'd love to see the data around, because like I've never even heard of this. This is the first time hearing it, with China getting access to the World Trade Organization in the early 2000s. But even just to add an additional point to that, you know, we're all familiar with inflation. Like the last 5 years, just like inflation alone, you know, we've seen what's happened to the stock market over the last 5 years. The people who've owned quality assets over the last 5 years have been able to stay ahead of inflation while wages haven't. So, you know, that alone is like such a powerful point to be like, first off, Robinhood has made it easy to where you can invest with just a single dollar. You know, you don't have to have hundreds of thousands of dollars to get started investing. And you've also made it simple. You know, like you don't have to have a finance degree to start actually taking advantage of this great thing called the stock market and to benefit from it. So like that's truly what I really like about it. And it leads me to my next point. What's like a big misconception that you think people on the outside get wrong about Robinhood?
Oh, I mean, you probably already said a few of those things, but like we're children. We're the annoying little brothers. We're just here to promote gambling. I mean, you've heard you took away the buy button. Like, I mean, there's so many, you know, we're not here for the people. I mean, there's like you go to a Reddit thread, you can probably see all the things. But I think that's actually in some way, like this is just how I've been, I think, programmed to live in this world, which is like I really always root for the underdog. And the fact that we're still an underdog after all this time keeps me excited. Because I think investing, so one of the things I always say is that expectations are everything. Everything and everything you experience. It's all about expectations. So if I always put it this way, if everybody you know goes and you're like, oh, have you seen this movie yet? It was so good. You got to see it. By the time you see it, you're like, it's good. I don't know if I'm like, you know, because everybody built it up too much in your mind.
Yeah.
Now, if you knew nothing about the movie and you went into it, you'd be like, that was an amazing movie. Everything else is like that. Who you hang out with, everything is about what is your frame of reference when you walk in the room. And so is investing. Like, what does the market already expect? If the market already expects amazing things, there's more room for error. If the market expects nothing, if the market thinks you are not going to survive, you got a way better chance of outperforming that. And so that's why I think I get excited about working here, is because I'm like, we still have room to impress and to beat expectations.
Josh, that's a great question, man. I think there's also just a natural gap and a big blind spot in clarity just in general surrounding the investing finance space, right? Because people have a difficult time and fear what they don't know or don't understand. And so due to social media and some of these other things out there, people will just kind of fill in the gaps and come up with reasons that they think is the objective or the motive of the owners or the people that are, given this access to people. And so it's unfortunate, but I'm starting to recognize that sometimes, even if your motive or your intentions are good, right, how the tool is going to be utilized or people's perception of it is just subjected to whatever they want to think, they want to say. I mean, because I remember the GameStop frenzy, and during that time, is like the tool is the tool, right? How is utilized? There is shared responsibility. Of course, the business has to create things and put things in place to help mitigate certain risk, of course. But at the end of the day, we, the users, right, the people, we do have to start thinking a little bit deeper in our role and taking some accountability for the actions that we're taking. And that really comes down to being able to digest the right type of content, the right information, and having a long-term investing mindset to begin with versus, oh my gosh, this thing is going to the moon. Let me just hop on and see what I can get, right? I think there's a lot of gray area there, and I feel like it's unfortunate, but a lot of the platforms and systems and tools get like 100% of the responsibility just put on them versus us also, hey, giving a second thought and realizing, okay, what part can we do to make sure that we're learning the right things, we're doing it the right way, and not spreading misinformation.
So, Steph, my question to you is for kind of the younger generation. I'm 22 right now. I've been investing for about 5 years. Robinhood is a huge leader in innovation with AI. And I'm curious how that has played into the development of Robinhood over the last 5 years. And where do you see human interaction still, like, where is that still necessary in future development of Robinhood itself?
Yeah, I think we've been AI is certainly something that's like at the forefront of all of our minds. Vlad has made sure that it's like integrated into our workflows. So we've been using it for a little while now and just like internal workflows and things like that. Our customer support teams, actually, I think we are sometimes you're not talking to a person, you're talking to a bot that solves a problem for you, answers a question for you. And we monitor that to make sure that it's accurate. I don't know if AI totally takes away human interaction, because I think we'll see how it evolves, right? Like but I think sometimes people, like my experience with people is that like they'll use it for things that don't matter, but when things are really, really matter and are like close to you're really you have a strong emotion about it. Sometimes you just want to talk to a person and be like, just kind of have that like energy transfer between you and the person. I really truly think, and you don't get that with AI. So I don't think it replaces it completely. I just think it removes the necessity of talking to someone for anything that doesn't matter as much. And I'm not going to say much other than like there will be more stuff coming that will be AI oriented that can help, again, make our customer base, just provide them better tools that may be in the realm of AI. And but with the recognition that I think also I think if I were 22, I would be like, I don't need to talk to a human. I'll just do this all myself. When you're 42 and maybe you have a family and other responsibilities, you might be like, actually, now I needed to ask somebody this question. And I kind of, even if you do some due diligence from AI, you just say like, this is what I'm thinking. Do you think that's a good idea? Or is there like something I'm not thinking of? That's what I found. I think when I was in my 20s, I would have been like, AI can totally replace every need that I have. But I also think like time. So the other thing I like to say is like time is a non-renewable resource, and it's precious, and you need to, divide it very carefully. AI can really give us back, like, can help us maintain that like ultra precious resource, right? Like it's more precious than anything you could buy in this world, in my opinion. So that's why I think it's like it is a gift. And now I kind of went on a tangent, but
No.
anyway.
I
Also,
love that.
when you think of AI, also there's a lot of risk involved when you're going to use a tool like AI, like she said, like the ages too, like when you have so much risk, which is money that you're working with, can you trust that tool to help you, or even maybe do indicators or wherever we're at in the future with your money? I mean, if you're investing this hard work money that we talked about once, then will that tool give you the right information? Because we live in a world where some information is not correct and some information is correct. So how do you see that, right? Like, can you trust Robinhood with that too? Right. So I just want to mention that because I think that stands out with AI. A lot of people use it to kind of help them do something, kind of like, having a brother next to you at all times, or somebody that's like a backup. But can they do it for you physically? If maybe some people work physically for their money. So putting it in there and trusting a tool is, I think it's never going to be irreplaceable when it comes to physical or human part.
Yeah, AI probably can't cut my hair. Although you never know. It's like maybe if it had like the tool,
Yeah.
like right, like maybe I don't know.
Yeah, no, that's fair. I could definitely see it being utilized. And I'm sure, I mean, I know you can't discuss the future tools you're working on right now, but I could see it being used for research for sure. I mean, I even use it to upload, like I'll upload earnings reports or annual reports from companies,
Be
and then I'll
like,
just
summarize
use it.
this for me.
Yeah, or
Yeah.
help guide me to understand
Right.
certain things, or help me like, hey, I'll give it to my thesis about a company. I'll be like, prove me wrong. Like, how am I thinking about this incorrectly? Like, just to help me grow as an investor. Like, that's been an incredible learning tool with these AI tools that I found. And like, I could see, I hope Robinhood is working on something where it's making stock research easier with AI, because it's such an incredible tool. Like, I use it all the time to just help analyze companies and analyze my own thought processes around certain stock investment options. At the same time, what Fernando highlighted is important, because like these AI systems do have a history of hallucinating or maybe giving some wrong information, although, it's not, it's pretty accurate. Like, I would say almost always, like it's pretty good. Like all the responses I've gotten, all the researches, like reports that I've kind of ran through, like it's done an incredible job at like giving or highlighting the key points. And what I usually do is like I'll go back through and just like double check everything myself. Like I'll check its work, or have it check its own work, like asking the AI, like prompting it, like, hey, double check for any errors. Like sometimes it will catch itself making errors, which is also an incredible way to kind of work around that if you're using AI to do stock research. But incredible stuff. Pierce, so I'm also curious, like with Pierce, it's like what's been maybe even like in your friend groups, like have you noticed more younger investors going towards Robinhood because of it being easier to access? Or like what's kind of like a trend you've noticed with the younger demographics when it
Yeah.
comes to.
I'm curious about that too, because I heard some rumors about, yeah, anyway.
Yeah, so I mean, to preface, Robinhood, I'm very blessed with the friend group I hang around with. You surround yourself with like-minded people who want to do very similar things in life. And so speaking of the first, kind of niche I got into Robinhood, I got started investing in 2020 with a financial advisor my dad hooked me up with. But Robinhood really hit me when the GameStop thing happened. And one of my close friends, his dad works for Citadel. He's a big guy at Citadel. So that's how Robinhood came into my life. And this whole meme stock frenzy just kind of took off, and I never understood it. I've always been a long-term thinker and like just a long-term guy. It's how my dad is. We're Eastern European. That's how we think. And it's cool. I mean, hanging out with these types of people that are forward thinkers, people who think about the future, who invest in their Roth IRAs and stuff like that before they go buy new flashy cars and so on and so forth.
Love that. The next
Interesting.
generation they're so much better than I was just going out to clubs when I was 22.
So trust me, I mean, we all have our fun too. It's just different types of fun. And it kind of does suck though, because I see a lot of people who I graduated with and whatnot aren't thinking the same way. I mean, there's many people who I know who have college degrees, good college degrees, and they're not doing anything. They're not doing anything with this. And maybe there's no lead, there's no direction, but if I don't know if it's lack of purpose or what it is for these people, but I don't see as many people as I wished going towards financial freedom. And what I mean by that is like being able to do what I want with my time. I mean, it's a Thursday afternoon at 3 o'clock and I'm sitting at home. I mean, I'm very blessed to be able to say I could do that. And it's many people don't prioritize that. They prioritize these flashy things like wanting to get in on GameStop before it went all the way up and then sell. It's like, but the reality of it is when you hear certain people talk about it, it's way too late to get in already. And I'm not an advocate for these meme stocks or anything like that, but it's just it's an interesting world to live in as a 22-year-old. And I feel like I'm in competition with people twice my age. Houses when my dad first bought his house was $200,000, and that same house is $4 million now. And so I mean, I live in California, granted, so but it's just this development of society over the last 20 years has just absolutely boomed. But yeah, I mean, that's pretty much it. I mean, I'm open to any other questions.
For the ones that are like you and thinking about like their futures, are they, how do they invest? Like, are they investing all on their own? Are they doing their own research? Are they trading options? Are they investing in just stocks? Like, are they doing other, like, I'm curious
So I do
how
have
they get their
some
info.
I do have some friends who, were blessed with an amount of money and their parents said, hey, you can go screw with this, go do whatever you want with it. And some of them took the day trading route. Some of them took the, long-term investing route. And I'm one of those kids who took the long-term investing route. And I've been investing for 5 years. And now I'm able to see the effects of compound interest, which is actually a crazy thing. But how they get their info is mostly just, obviously, well, earnings reports and stuff like that, whatever these big financial institutions put out, these people on different things like Reddit and all of these new social media things
Yeah.
that you're able to analyze the trends, see the trends, and kind of see how it works. It's an interesting thing because, like you guys said, it's a lot of it is just a lot of it's BS if I'm gonna be completely honest with you, because you don't know what's real and what's not. And I'm a very, very real person, like, Apple. I know what's behind Apple. I know the people behind Apple. I know, I can read these earnings report, but it's these newer companies that people try to get in on. That is the kind of scary thing to me. Like a lot of my friends, they're trying to get in on the new Apple. And it's like, okay, for that to happen, it's going to have to go up, 300 times, dude. I mean, that's pretty insane. Just stick with what works. It's just a lot of social media stuff. I mean, I've seen social media play an absolutely ginormous impact on how at least my friend group has analyzed, financial investing in the sense of, Wall Street bets, as everyone's familiar with. I mean, this guy posts something, they have a million people ready to go buy that one thing. And so the power that this one person holds is it's kind of scary to me because it could skew so many people the wrong way. So many people who don't have the intuition, the gut feeling, if it sounds too good to be true, it usually is.
Yeah.
And it's kind of the thing that social media has screwed with. And that kind of leads me to a question that I want to ask you guys. How do you think that Robinhood's influence on social media is going to be able to analyze the pros and the cons? Like, how are you guys going to be able to, how do I iterate this? How is it going to be able to give confidence to like a younger investor like myself when there's so many different things on a platform that is, flashy? It just looks flashy, like these new things that pop up that go up 200%, 20% in a day. And that's kind of the question. Is there going to be risk markers or I don't know. I'm just kind of curious if like what you can say about that.
Yeah, it's a good question. We have added a lot of stuff. I mean, if you spend the time, like if you go to our stock details pages, we've added a lot of information there. We show you what like if hedge funds are net buyers or sellers. We're showing you what our platform is doing with it. And then there's some other like financial sort of data. We have a stock screener too, which like you can sort of sort things, sort stocks by certain aspects, which, I would love to grow the metrics in that. But I think like the one thing that I try to preach I have a weekly blog called Investors Guild. So my last name is Guild. So it's a play on that. And we have Obi and I do a weekly live stream on Fridays after market close, just to go over like what happened in the week and look ahead to the next week. And the thing I always try to say is like, I don't have a problem with people going after flyers. That's what I call them. Like, but I think what you need to have your, it's like your triangle set. Like you need to have your emergency cash. Anything happens, you're working, you lose your job, you've got something to tap to get you through. You should have a base of like long-term investments, whether that's exchange traded funds or anything, and it's something that's just long-term, diversified. Maybe it's in a retirement account because then you don't have to worry about it for a long time and it's in a tax shielded type of account.
401k.
Yeah, sure. Or just opening a Roth or a traditional IRA, depending on what's right for you. And then once you have those things, like, and how much is in each bucket, like each of those buckets, like really depends on you and your lifestyle and what makes you feel comfortable, how much you need in cash to just feel like, okay, I can go, once you have those buckets, then I think the top of that triangle is the things that like, this could go to 0 or this could go to 1 million. Like those things that like if you lost the money, you would be still okay. But if if one or two of those things hits, it would be a material change for me. Like I think you can't not take risk in investing. You can't, if you're never taking risks, you're really not getting return. So that's why I'm like, you don't want to take on unwieldy risk. But what I don't like about traditional Wall Street is that they like are always embedding in you this thought of diversify, just buy S&P 500 and walk away. And I do think you leave one, education for yourself on the table. I'm not saying there isn't a place for that, but two, like a lot of that stuff is grounded in what's called modern portfolio theory. Modern portfolio theory was created in 1952, and it was created for people who already had money or institutions who wanted to just maintain what they had. It wasn't created for the people who want to build something for themselves. So that's why I'm like, I don't have a problem with people doing that. I just think you got to set yourself up before you get there.
Would you say it's more of a risk tolerance discussion where like, obviously there are people out there who are completely okay taking aggressive risk and they know that if it goes to 0, it is what it is, but they're going after that 100x and that's their philosophy. Like that's what they want to do. Compared to there's also investors out there who don't want to take that type of risk. Like they want to take something, more of the stable route, which, here at this podcast, we're all about building a foundation of stable investments.
That's what I mean.
And exactly. If you want to reroute to like different areas after that, be my guest. Like you are the decision maker of your money. So like who are we to sit here and tell you what to do with it or what not to do with it?
Totally.
Like, of course, be smart about it. Don't sit here and just think if you're gonna go after all the gambling things, that's gonna like save your retirement and everything's gonna be great and all everything's bright. Like there's risks to every decision you make, whether it's taking the aggressive approach and you're going after those shiny objects, or whether it's taking the safer route. There's a risk to taking the safer route as well, especially if you want to be in like target date funds or even something even more diversified. Like there's real risks there where people don't talk about it, but it's over diversification. Like you can be over diversified and the risk there is losing money.
Yes, you can. It used to kill me sometimes when I would see like portfolios and be like, okay, we're moving 1% from this to this. And I'm like, oh my God, like, I do think, there's certainly over diversification. It doesn't mean that you should not, like, you need to take what comfortable risk you're comfortable with. But I think if you're only ever doing flyers, it's gambling. If you and so that's the difference between an investor and a gambler, right? Like if you're just throwing it on red and seeing what happens, right? Like that's gambling. If you've got a base of investing, like then it's like, okay, I'm going to see what happens with this. And I understand that this little piece of it has a huge amount of risk and some sort of like perhaps unknowable upside.
And Josh, we talked about it on the podcast that we had, right, with me. That I feel like that's exactly what I said. That's go play money. Once you have that triangle build, which is your foundation, then you have the tip of it, which is go play money, which is that money that maybe you got it from that same investment and you keep climbing it up. But like what Pierce said, right? In the younger generations, what I see a lot is they want results right away because we live in a world where we have AI. It gives you a quick answer. So people want quick money. So if you want quick money, you have to build a triangle. You have to build a foundation, which is what we're all about. Knowledge foundation, investment foundation, build your funds because you don't want to invest or go play with money. Or basically like a basketball game, right? Go play with it and not inflated ball and lose the game. So like, think about that. Always think of like information is knowledge. Take as much that in and then go in and play. If you want to become an active trader or day trader, which everybody wants to become nowadays because they see this social media
Seems
luxury.
exciting, right?
Yeah, they see everybody in Dubai or Europe and they're like in their
Yeah.
laptops, like, I'm investing, I'm a day trader. Well, you could be that, but first you have to build that triangle, that what Steph said. I mean, you
Mhm.
can hear less from her. She said it. I mean, we're right on that.
Yeah, I know. I also I think I really like the fact that we have Pierce on here, right? Because it really shows the depth and range of just different perspective, different needs, different priorities, different thoughts. And I know sometimes the younger generation think obviously retirement is like 100 years away. You know, they have all the time in the world, which they do, or or they want the results quick, like right away, just like Fernando just touched upon. I mean, let's face it, they're living in the Amazon Prime world, right? Like everything's at your fingertips.
Seen
Get it in
them.
2 days or the same
I
day.
I saw this comedian that was like, he's like, I grew up, he's like, you rented a movie from Blockbuster, you had to rewind it.
Mhm.
He's like, you had to wait. Like, he's like, you rewind, he goes, mindfulness. He's like, we had to wait for stuff.
Yeah.
Which is true. Like, what, but we know we don't have to wait for anything anymore.
No,
So I get
no.
it. But one thing I do want to say about retirement is I kind of want to rebrand it
Good.
because I think I think the world will be different in like 20 or 30 years. And that like I think people I heard this economist once talk about it. I think he works at, I forget where he's at, Oxford or New, I don't remember. But anyway, he made the point that he thought people would be living longer and we'll be in this, and with AI and other technology that like people actually have multiple careers. Like they will like in the first half, they'll do this kind of job. And then they'll go back to school and they'll do this other kind of job. And it made me think that like actually retirement is like gives you freedom for the second half of your life. Like, and you know, and I was like, it's not just like, here's the money so I can like die in a warm bed. Like,
Right.
to me,
Like
it's
65, enjoy a little bit of it, and then
right,
hope
like
Doing
that
I'll like
nothing. Yeah.
putter around the garden and like, you know, just like live out my last days.
Yeah.
No, for me, it's like, oh, it gives me the freedom to live the second half of my life.
Mhm.
I agree,
love
Steph.
that.
I think it's a constant evolution of just our ways of working and ways of having impact and purpose and meaning and paying things forward. And I really do appreciate Piers being on here because it's powerful to hear your thoughts, Piers, because the younger generation gets a lot of flack from not operating in the same fashion as like the older generation might think, or you know, X, Y, and Z. But I think you guys are incredibly smart, and I'm glad you guys are incredibly smart. I mean, with all these
Smarter than I was.
resources, right? Yeah, with all these resources and tools, I'm glad that people are leveraging and taking as much advantage as possible. And again, the world has changed, right? Some things are a little bit more complicated, a bit more complex, not as easy to get around or get ahead. And I would hope for two things. The one is the millennials and older generation that are active listeners on this podcast. I would hope that you do try and have you know good dialogue and great conversations with the younger generation in your family, or you know that you're around, whether your kids, nieces, nephews, and just see what they think, right? And more so from like an understanding perspective, and just listening to see what they think, how they feel about things, and you might learn a thing or two from it. I mean, I'm learning so much from Pierce every episode as we we provide additional value to everybody. So that will help kind of demystify and reduce and remove some of the gaps and the confusion in their entire ecosystem there. And the second thing is really is for any younger generation that's listening to our episodes and podcasts out there, feel free to reach out if you have comments, questions, thoughts, because your opinion and perspective is more valuable than you might think. I mean, the future is built for you. You think about it, right? There's going to come a time where we won't be around as much. We won't be able to have as much impact in shaping the direction of the world and the direction of society. You guys are going to be tasked with that role and responsibility. So the more we can support and collaborate and not just invest our money, but invest in you so you can build the future that you truly want to see in the world, I think that's a beautiful thing. So just a little deep thought for everyone to kind of ponder on a little bit.
No,
Amazing.
well said, Buffy. And I know we're kind of approaching our time. And I just really want to reiterate as well, like that's what this whole podcast is about. Is like we're not here to create an echo chamber. Like we're here to have different perspectives on and to be able to think through different situations or strategies. You know, like for example, Pierce invests in a different way than I invest. Boffy invests in a different way than I invest. And we have Steph here, you know, mentioning all the different routes that you could potentially go. You know, whether it is trading or having a hybrid strategy where you do have a long-term portfolio, but maybe you want to learn to be more of an actual investor and like research companies, research stocks. And there's like nothing wrong with that. It really comes down to like what's good for you. And my philosophy is like the best way to figure out what's good for you is to learn from different perspectives. For one, you might get curious about another route that you can go, which is why in the last episode we had venture capitalists on to just explore the different areas. There are different routes, there are different strategies, or it might just solidify the strategy you have going on right now. You might be like, that's not for me. I'm going to stick with what I got. Cool. Either way, it's a growth opportunity and you're learning. And that's what we really believe here with the Market Hustle podcast. That being said, Steph, before we officially wrap up this podcast, is there any last comment that you would have for our lovely listeners who maybe are just beginning their investing journey or they've been on the journey for a couple of years? Is there any message that you would like to give them to help make their journey a little less chaotic?
I would say stay curious, and meaning that you should, or not should, I don't like the word should, stay curious and like question, don't make assumptions. Like one of the first things that whenever somebody starts working with me, I always just try to impress upon them. Like, I don't want to ever hear you start a sentence with, I assumed. Oh, well, I assumed. I really think like, and then I joke, like I've labeled like when things go wrong, I'm like, oh, that must be an assumption fire. Someone made an assumption along the way and now we have to go back and fix it. So I think like stay curious when it comes to investing, like stay curious, like why did this stock move? Like, why did it go down? Why did it go up? Is there some other news that I should be like paying attention to? Oh, I see. It does a lot of business in Canada. Tariffs just came, like, stay curious and always just like question why something might be happening. But at the same time, don't let your emotions get the best of you. I'm a true, like, when I think about investing, and my approach to investing has been really shaped by my experience one of the teams that I work with when I was in JP Morgan, we were grounded in behavioral finance theory. And that's like versus modern portfolio theory, like that basically takes the view that, and this is how I feel, the market is one big human, and it has FOMO, and it has greed, it has like and at any given day you don't know what person you're going to get. Mm-hmm. But you stay curious to that, and also understand that like the market has biases, right? Just like a human does. So if you can sometimes invest based on those biases, and that's what behavioral finance is. So that's where I've kind of, that's why I say expectations are everything, because if you know what the expectations are, then you can decide whether you agree with them or you think they're not, they're too low or too high, and make investments that way. So that's a couple of different things I've learned over the years.
I love that. I love that. Another thing like I tend to say is, the best way to get an advantage in the market, whether it's investing in individual stocks or even index funds, like certain ETFs or whatever it is, like the best way you're going to get an advantage is by understanding it more than the average investor. It's by digging deeper, asking, like Steph said, challenging the assumptions the market's making. Like, what are the assumptions the average investor is making? Like, that's how you gain an advantage, right? And a lot of the times, I think what makes it hard is when you dig deeper and you make when you challenge assumptions, the group or like the majority of people are going to think you're crazy. So you got to be willing to kind of be the odd one out if you're going to go down that route. At least that's what I've kind of found.
It may not work right away.
And that exactly,
like what if somebody was like, oh, you can be, you can only be wrong as long as you can afford to be wrong. Like, so, but that's why I think, diversification isn't a bad thing, just that's why I'm like, sometimes you don't want to put all your eggs in one basket, so that if you're wrong, it's okay.
I want to mention too, like, consume technology to your advantage. Don't let it consume you. Because a lot of technology, social media, I mean, you have the Market Hustle, like follow us, like follow Robinhood too. Like, look at that social media and learn something. Consume it to your advantage so that you can get ahead of the game. And like Pierce said, everybody's trying to get ahead of the game. Use your tools to your advantage. Use technology because it's going to get quicker. It's going to be more information. And if you let it consume you, it's going to be, it's going to give you a headache and it's not going to let you sleep. I'll tell you that.
Well said. That being said, Bafi, do you have any last minute closing thoughts before we officially wrap things up over here?
Just a quick one for everyone to always try their best to remain open-minded and try to get the facts before you land on a conclusion, right? Like do as much research as you can before you block potential opportunities just with your own biases, and similar to what Steph was saying. So just remain open-minded, because this next 10 years here, if we think the last 5 years has been crazy, we have not seen nothing yet. This is the tip of the iceberg. So you do not want to get left like off the bus, man. Like this bus is only going to go faster and faster, and you don't want to get left behind.
Well said, man. Well said. Pierce, how about your end? Any last closing thoughts?
No, dude, I'm still trying to think of everything we just talked about. I'm all good.
Pierce is processing.
I am, dude. I got to read through my notes
Good.
again. Thank you for coming on. This was absolutely phenomenal.
Love it, man. I love it. Fernando, how about you, my friend? Any last closing thoughts?
No, just that. Always think about that, right? When you open your phone, make sure you're using the right tools, the right apps, and you're learning something every day to build that foundation, the triangle, what Steph talked about, and what we've always talked about, building the foundation, using your tools to your knowledge, and also get a role model, find a role model, somebody that you want to be like. And a lot of people that people want to be like, maybe they're celebrities or not, they're investing. They're not going to be left behind. They're not going to, we're in New York, right? We're not going to be left by the subway. So that's all I got to say. And I thank you, Steph, for having me here.
Thank you.
And
Really.
Yeah, Steph, this has been great. Thank you so much for coming on. I think this is definitely going to be an episode to re-listen to, just because there's so much good information dropped here. And it was great to have somebody who's deep in the trenches in the financial world and has the experience, such as yourself, Steph, like over 20 years at JP Morgan, as well as helping out, building incredible products at Robinhood. I can't thank you enough for coming on. Maybe give us a little bit of context of where, or information of where our followers can find you. I know you mentioned you had the guild, the investor guild, the blog. Is there any other social media you're on?
Yeah. So on learn.robinhood.com, there's I think there's a link at like the bottom of the page or something like that to Investors Guild. But also I'm on social, on X and Instagram. I'm on Steph Guild NYC. Look out for fakes because I have been copied. I will not DM you. And on LinkedIn too. I'm there. And then sometimes I'm on Bloomberg. Sometimes I'm on CNBC if you're watching occasionally. So usually closing bell on CNBC.
And you're on the
Awesome
app.
stuff.
I think.
Yes, if
Circa-
you're
yeah.
if you're a Robinhood customer, my weekly blog is on where the news is.
Yeah.
Like it's always at the top. Yeah.
Awesome stuff. Go follow Steph on her platforms. We'll also leave her links in the bio of the podcast. Also, make sure to leave a 5-star review. Like, this was an incredible episode. I really enjoyed this one. And, real quick, Steph, we have a mission on this podcast. We're hoping to get Vlad on the podcast one of these days. So hopefully this gets us a step closer, because
Okay.
that's like one of our big goals.
I can tell
And
her-
again, we really appreciate your time for coming on this podcast. That being said, that's a wrap for episode 42. Market Hustle community, you have a great rest of your day. Thanks for listening, and we'll see you back next week. Bye-bye.
If you feel just like I do, link up, come and join this crew. Hey, I'ma go invest and I'ma watch my money double, take it to another level. With that market hustle, always play it smart. You ain't dealing with a sucker, take it to another level. With that market hustle, I'ma hustle, hustle. 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 With that market hustle, go.